So finally, the week has ended and ended with a bit respite, but it is not at all satisfactory because what we require is a broad based rally, and what we have just got is some sort of it's like you are the second last in the race. So we don't want that kind of consolation prize. So things are not at all looking good if you are looking at the overall week that has passed by, and the kinds of things which are happening in terms of central bank, in terms of stock market, in terms of overall economy is not at all good as far as the Wall Street, as far as the US economy, and as far as the global economy is concerned. But because we are more focused on the US economy as it is the mother market across the globe, so any problem in US economy can have direct or indirect impact across the globe. So with this, let us start, and let me welcome you all to another session of USA Weekly Market Report series, where we are going to discuss about the main events that drives Wall Street the week that has just passed by and the week that will start going forward. So let's start with the news. And the highlight, there are lots of things which has happened last week, but the highlight was the shift in the commentary. I mean, one day somebody is saying something else, another day somebody is saying something else. So this kind of shift in the commentary of important people, those who are serving the country with important designations, does make the market jittery, because when you are talking about money, you have to be goddamn serious. So let us see, and if I may go through the news releases or important headlines, you will see a shift in the headlines as well. Okay, it is not because those who have posted this news they are wrong. It's like whatever they got they have posted, and whatever they have got, it does not match with each other. Number 1, Deutsche Bank is not the next Credit Suisse, analyst says as panic spread. Now let us see what will happen, because Deutsche Bank has its own history. In the last couple of instances, Deutsche Bank was the one who literally saved by last minute. So whether this will be the same kind of scenario or not, that is something which we have to look at. But the rise in CDS is not at all a good indicator. And apart from that, yeah, we'll discuss about each and everything about the market. Europe's leader battle banking crisis as market rout hangs over Brussels summit. Now, in this session, what I'm going to do, I'll cover the Euro indices, okay, the important indices like CAC, FTSE, or DAX in the chart section, because that's something which we also need to look at apart from Dow Jones, S&P, and NASDAQ, because it's very important to discuss about the price action as far as European indices is concerned, because things are not at all looking good, and if there is anything big which is about to start or which has already been started, so that's something we must have an information about. Okay, let's go to the next one. Nearly $100 billion in deposit pulled from the bank, and official call system sound and resilient. So you can I mean, you are smart enough to read the headline and to get the gist out of it. I don't want to go through it. Next one, the Swiss claim the US banking crisis ultimately toppled Credit Suisse. Are they right? That's anybody's opinion. Apart from that, the geopolitical tension is also going on. This is not good. And if you think that it does not have any impact, it will. Everybody knows geopolitical crisis does have its own impact. And apart from that, the one thing which nobody talks about is the natural calamities or natural disaster that has a huge impact on any economy over a period of time. And this kind of I mean, unusual rain, unusual thunderstorm, unusual typhoons, unusual cyclone. These are not at all good things for any economy. It may not sound or looks very big until and unless you are somebody who actually faced it. Then you will think that yes, it does have a devastating impact, but otherwise nobody cares about that. But one should take those kind of things because the kind of instances we have across the globe, US is not the safe haven. Okay, because wildfire, natural calamities are very common in US. So it is very important to discuss about that as well. Okay, apart from that, let us see what else we have here. Okay, let us see. Yeah, Yellen says a treasury is ready to take additional actions if warranted to stabilize bank. I don't know what she is trying to do. I mean, you if you are shifting your view, what are you trying to say? Because the US president has already said that we will save the depositors. Now one day you come and say, yeah, we don't guarantee any safe haven for uninsured depositor. Then on the next day you are making these kind of statements. This does make market jittery because what market does not like is uncertainty. Okay, whatever you want to say, yes or no, be very clear about the words. When market feels uncertainty, market feels jittery, you will see a huge amount of volatility and risk started piling up into the market. So these are not good signs. This will never be good signs. And one thing that I think most of you, those who are very familiar at stock market or those who check out the news or the trends as far as stock market or main events are concerned, they know what is happening. So let me show it to you. So this is Fed balance sheet. Okay, let's go to the Fed. You will see what is happening over there because yeah. So let me zoom this and then you will see this sudden spike. I mean, whatever you want to call it as, but you are indirectly pumping money. This is what it reflects. You are indirectly pumping money, and it is very near to the levels that it has made in the month of March or April 2022. And on one side you are increasing interest rate, on another side you are pumping in the money. I mean, this does not looks good. It does not look, and it does not make any sense either, because with this you cannot even try to, if you are trying to control the inflation with this kind of approach, I mean, you just do one thing. That's what is very important. And because of this kind of approach, market or the bond market has already sensed it, and that's why you can see the yields started falling down. Let me show it to you. But this is not at all a good sign, and this is not at all good for the economy, because you need to keep moving the interest rate higher. And if it goes up to, right now it is at, after the latest development, it is at 5%. If it goes to 7% as well, I'll not be surprised, because if you do these kind of things, then obviously you can't control inflation. Okay, so if you this is a double-edged sword kind of situation for the central bank. Okay, with this, let us start analyzing the important things or the charts. So Dow Jones, NASDAQ, S&P 500 closed in green, but what I don't like is I mean, Dow Jones moving up and down, it does not make any sense, because most of the if Nasdaq performs good, then overall the broad market will perform good. That's the kind of scenario, because Nasdaq represent a very limited 30 companies. Rather, you check Russell 2000, indices or NASDAQ or S&P 500. These are the important parameters that we have in front of us. Okay, VIX above 20 does not give you that soothing factor. What is falling down is oil at 69.2, but falling oil does not sound good. I mean, those who are importing countries, it may sound very good for them, but falling, if the crude oil or the Brent, WTI, whatever, started falling down at uh, uh, at a certain pace, it also means that the economies are slowing down. So this is not at all a good sign. So there are lots of permutation and combination which we must understand to understand the price action of oil, but that's not the point of discussion. Okay, apart from that, yeah, what I was talking about is this section, the treasury yield. I mean, those who are regularly watching my videos, they know that the 6 month or 1 year yield uh, went up to 5.5, in between 5.3 5.5. Right now it is 2 year yield is trading at 3.76, 1 year yield as 4.3. So this 6 month, 1 year and 2 year, they just crushed like anything. There is a reason for that. Okay, because whatever you want to do with equity market, that's fine, but bond market, when bond market moves, it gives you a much better or much clear signal. Apart from that, the dollar index is just hanging because below 103, it just closed above 103.11. I have a very clear view. If dollar index or DXY continues to trade below 103, it is in a big downtrend. Be very sure. But the problem is, if you directly correlate it with the upswing of equity indices, that may not happen right now because that requires particular situation, and in that situation inflation will not be a factor. Right now inflation is a major factor, and if inflation continues to pops up, you will see oil price goes down, you will see even dollar index goes down, and you will see equity indices goes down because the inflation is moving higher. If inflation is normal, then the situation work. You will see, you will even see that dollar index falling down and stock market going up, or even sometimes commodities are also going up because of the demand. But once interest rate or once inflation goes out of the normal band, things, it simply means things are not looking good, or there is something very very bad that is happening. Apart from that, this is what we have as far as European index are concerned. So DAX 1.66% down, FTSE 1.26%, and CAC 40 down by nearly 1.74%. So things are not at all looking good for European indices. And I mean, just believe on data. Don't believe on me, and I will say don't believe on the central bankers beyond a certain point. Okay, if they are saying that they are increasing the rate, believe on that, but don't go beyond that. What you have to believe, or what you must believe, is the available data. Okay, don't believe on their words, just believe on the data. If the data is saying things are going up, believe on that. If the data is saying things are going that down, believe on that. That's the most reliable thing which we have in front of ourselves, so rely on that. That's what I want to say. So let's start analyzing the move. So let's start with this time European indices. Generally I don't do, but the situation demands it, so that's why we have to do. And if you are looking at, so let's start with number one, CAC 40, so the French Paris index, and what we can see over here is a resistance, and you can clearly see it may turns out to be a big breakout. But now the kind of situation we have as far as European economy is concerned, your previous resistance now work as a current resistance as well. So with your resistance zone that will be in between 7,000 and 7,400, what one must look at the least, okay, because we are talking about the, if you are looking very short term, so if it does not cross, if CAC 40 does not cross 7390 or 7400, it is definitely moving towards 6180, 6190. And as far as the big swing is concerned, or as far as the big trend is concerned, so here we are. If it even falls below 6180, then it will fall towards 4300. So these are some of the levels which one must look at. If you think that these are very big targets, yes, they are, because I am talking about the monthly chart, and this is not something which I am going to analyze or reanalyze on regular basis. This is the scenario, the importance of this scenario, the situation, understand it, and that's why I am giving some additional data points to you. So just focus on 7340 and 7000. If CAC falls below both these levels, we have 6190, and if CAC falls and sustains, if does not go above 6180, then 4300, 4500 will open up. Okay, next will be FTSE. So yeah, similar sort of things. Okay, it hits the resistance or the previous high of here we are 2018. And if you are looking at UK indices, let me tell you, I mean, now the situation of Brexit or the decision of Brexit will cost them a lot. I mean, when situation is not good, specifically I'm talking about the current situation, things are about to crumble. How they are going to manage it, that's a very big or very interesting thing to look at. Now, as far as the price action is concerned, what I will look at is this particular section. So on the upside we have 7941 and 7707 or 7700. If FTSE does not sustain above 7700, which it is right now, then it is moving towards 5500 or 5600. So I mean, this will take its own time, but these things are not at all looking good. So don't rely on these things. That's what I want to say. And apart from that, the German DAX has not started falling yet, but just look at the trend, because German, I mean, those are one of the strongest economy if you are looking at European Union. So the least, even for the uh, German DAX, what we have in front of us is something like this. So here we are. So this is the current range which one must look at. And mind you, I'm not talking, these are not stocks, these are indices. So this will take couple of weeks, couple of months rather, to actually perform the trend that I'm talking about. So if DAX does not sustain above 16,380, 390, and if it continues to trade below 15,680, then the big support will come at 11,850, 860. So this is something which we are going to look at. So one thing is very clear, not even a single European indices looks good. Now let's come back to our regular indices, the US indices, starting with the Dow Jones. And even though we have seen some sort of bounce back, but it does not make any sense. Let me tell you one thing very clear, it does not make any sense until and unless the trend changes. I'm not going to change my view. If I see that there is a change in the trend, yeah, we will definitely change our view. But right now what we have is something like this. Okay, so it may bounce back towards, let me show it to you. So this is the range which we have in front of us. Okay, this is the range which we have in front of us, and here we are. Okay, so here we are. So now you can see, you can clearly see a bounce back, but we require a sustainability after 32,600, 32,620, and if it does not happen, then Dow Jones is moving towards or in between 30,400 and 30,800. So the range is still the same, and if you want to extend this upside, then go for the range which is in between 32,500 and 32,700. So it may extend up to these two levels, but even if it hits 32,500 and 700, it is in a big bear grip and people will definitely short it, and it all depends upon how it's going to perform on Monday. But if you are looking at the overall trend, it is on the downside, and even if it moves 200 300 points higher, but there it will definitely find a big resistance. Now talking about the NASDAQ, that's where rising interest rate is not at all a good scenario for NASDAQ. Okay, now if you are looking at NASDAQ, this is what we have here as far as the price chart of NASDAQ is concerned, and here also we have seen some sort of bounce back, but this bounce back does not make any sense. 40 point, 50 point for NASDAQ, it's like a joke. It's really like a joke. It does not suits the kind of indices the NASDAQ or the components NASDAQ has, because when NASDAQ moves, it will give confidence not only to the broader US market, but it will boost the confidence for the global stock market as well. Now this is the trend that I am looking for as far as NASDAQ is concerned, at least for the next 1 week. If there is a big change in the trend, then obviously I will change the range or the base accordingly, but right now this is what we have here as far as the range is concerned. And here also, even though we can clearly see a bounce back, in if you are very optimistic, then it will move in between 12,700 or 13,000, but if you are looking at the trend, the downside is still open, and it looks like you will find a big downside in between 10,200 and 10,300. So what I am trying to show you is, even though there is a bounce back, but just try to find out and look out the big trend or the big picture for the next 1 or 2 weeks. Then you will get to know what is happening, until and unless you are an intraday trader who is professional and who knows how to manage their own situation. If you are looking at S&P 500, you can clearly see the similar kind of scenario we have seen in case of Dow Jones. Here also we have our resistance, which is at 4026 or 4030, and if it does not cross and make a breakout, then S&P 500 is moving in between 3600 and 3700. So most specifically in all the three indices, what we does require are some huge moves, and after that we require sustainability. Until that time, this 50 point, 100 point, 200 point move does not make any sense, because this is just showing that market turns sideways after a big fall, which means market is not going higher, and which simultaneously means when the sideways move big gets over, the downtrend will resume again. So that's not looking good. Yeah, one very important thing is the US yield, and let me show it to you what has happened. And you can clearly see the crush that we have seen. This is very, very big. This is the US 1-year yield. You can clearly see it crashed from 5.27 to 4%. Right now it is trading near 4.3%. Now you can clearly see the move what is happening right now, and that's why I'm saying that bond market is giving you a different kind of indication, but you cannot simply correlate with the equity indices move, because in a normal scenario, if the inflation is normal, you will see, I mean, 1,000 point move in NASDAQ. But what has happened? Just 40-50 points. That's like a small change. It does not make any sense. For US 2-year yield from 5% to, I mean, it fall down to 3.5. Right now it is trading at 3.7. So similarly, you have a huge crash as far as the yields are concerned. Yields are falling down and they are crushing like anything. So it does indicate something. It means whatever is going on, it's hollow. I'm not saying that the interest rate will not go up higher. It does, but it also indicates that the economy is not at all in a situation to, to uh, take that energy, to take that uh, momentum, or take that higher interest rate, because beyond a certain point we have already seen things started crumbling. Regional banks or smaller banks have already started crumbling, and 1 or 2% moves on the upside will shake the economy like anything, and you won't even get anything out of it. And mind you, I'm not talking in terms of stock market. Stock market or stocks or indices will fall down, people pour money and it will jump back in. But the important thing to understand here is the real economy, where people like you and me will suffer or will face the consequence. And that has an impact for a very, very long time. That's something which we must understand. So I mean, stock market moves because we are dealing stock markets, we are the market participants, and we make money out of it. That's a different scenario, but this kind of situation really hurts the economy, the real economy, very bad. Okay, so this is something which we also need to look at. The another important thing is WTI crude. Okay, because crude does not give us a very good signal, and you can clearly see how crude is indeed performing. $69. I mean, there is a huge fall that we have seen from the highs to the lows. 46% is already gone from the top, and if you are looking at the trend, it does not give you a very, very uh, it does not boost your confidence. That's what I can say. It's good, I mean, for importing countries, and when oil comes down, it try to help the inflation, but if it causes a huge fall in demand, but then it is not at all good. So second point is very true in the current situation. And if you are looking at the trend, WTI crude is in between 77 on the upside, which will be a resistance, but it is the way it falls, it looks like it is moving towards or in between 52 and 55. So this is what one must look at. So further fall is there, will be there as far as WTI crude is concerned. You have a minor support at 62, and if 62 is gone, here we are, if 62 is gone, then WTI crude will fall towards 52 and 55. Yeah, the last important thing for this session is, or will always be, the dollar index. Now as far as dollar index is concerned, I hope I've already talked about the price chart, big price chart. And if you are looking at the big price chart, whatever is happening right now, this is a very small consolidating range, and it sounds funny. It really sounds funny because there is no proper move that are happening. But if you are looking at the big price action, you will see something like this. You will definitely see. So this is a view that I am talking about for the next couple of months, at least 12 to 18 months. And so this is what we have here. Overall, if there is a change, in the trend, then I will definitely explain it to you. So right now the trend is in between 105 and 101, and if it moves above 105 or more, then you will move towards 119, 120. But if it falls below 101, then dollar index is moving in between 89, 90 or 90, 91, whatever you may want to call it as. So you can clearly see, I mean, there is anything which is going in the market, everything is now crushing down. This reminds me to 2016. Just go and check the market of 2016, where everything started falling down. Dollar index, the commodities started falling down. Then we have the equity market started falling down. So everything started falling down for the first half of 2016, and then we have seen a big global market rally. So this remind me, I mean, that's not the exact thing. This situation is completely different. I'm just comparing it. That's a relative comparison. That's not an absolute comparison. I mean, in terms of price movement, because each and every part of the market was falling down. So overall, the I mean, the shape of the market is not good. Whatever upside we have does not make any sense. If you think that market is turning, then look for a 2000 point move or 3000 point move in Dow Jones, at least 500 to 1000 point move in NASDAQ, and that day you can call it as a bottom, or at least a reversal from the lower end to the upper end of the day will have to be very big. Until and unless that happen, this kind of 40-50 point move does not make any sense. And if it is 30-40 points move, then the momentum must pick up, and it will, or those 40-50 points move must continue for the next 15, 20, 30 days. Then we can see that yes, the momentum is now building up. So situations are not at all looking good. So beware about the trend, be very cautious about the move. And one thing I'm very clear about, that this is an opportunity for long-term investors, those who really know their game. So this is the end of the video. Thanks for watching.